Welcome. Thanks for coming. Appreciate. I'm still letting a few people in. So if you could just bear with us for a couple of minutes, um, and I'll let everybody in. As you can see, the page that's up is about me. Most of you would know who I am. Some of you have met me in person, and it'd be great to see. If you haven't met me in person, it'd be great to see you at some of our events, our live events that take place throughout the country. Or it'd be good to see you at one of our sites to show you around. So it looks like everybody's now in the room. This is a webinar hosted by myself, Reese Meny. I'm the CEO of HJ Collection. As you can see, raised over 30 million from private investors, developed over 1,000 units with a GDV of over 400 million, completed 30 plus sites in the last 5 years, around 650 individual units brought to market. Now, what I want to talk to yourself about today is my journey, HJ Collection's journey, the help of our investors that have been with us since 2019. So this is a mid-year webinar just to bring you up to speed of what we've been doing. Some of you will know what we've been up to. Some of you won't because you're new to HJ Collection. So thanks for taking your time and coming on. Appreciate it. Just letting some more people in. Sorry, I will stop letting people in soon, and we can continue. But yeah, what you'll find today, and hopefully what you'll come away from, if you're a new investor, you'll understand what we do as a company and how you can help us get to our goals, and we can help you get above rate of return on your investment. If you've been with us for some time and you're already an investor, you'll see what we've been up to in the last 6 months, and so on. So again, just thank you for everyone's time. I'm going to just introduce you to a couple of the team members that you probably don't see or don't speak to on a day-to-day basis. Nestor Lisby, he's head of construction. You'll see that he's worked at some large sites, previous projects in the bottom left-hand corner. You'll see some of the sites that he's worked on: 19 million, 180 million, 240 million. And the reason I like to introduce these to you, who you don't see, Nestor, Dean Biles and Mason, I'll flick through them and I will come back to them. But you'll see the sites in the bottom left-hand corner is what I want you to look at, is the GDVs that they've worked on previously, a lot larger sites than what us at HJ Collection work on. But the reason I want to draw your attention to them past projects is, why would people that have worked on 15 million, 120 million GDV projects want to come and work with HJ Collection? And the reason being that they want to come and work with HJ Collection is as simple as they work right the way through from the design process, right the way through to delivery, right the way through to furnishing the apartments, right the way through to seeing actual people living in the apartments of what we create. And if you are an investor of ours, you would see in our magazine that goes out 6 monthly, biannually, that you can see and have some feedback from people that are in the team. Okay. And you can see interviews with the likes of Nestor, Dean and Mason, and they all echo what I've just said. The reason that they've decided to leave large contractors like Multiplex, Skanska, and large construction companies to come and work for a small to medium-sized developer like ourselves, because they get involved and hands-on a lot of things. Just going to let a few more people in because there's a few still in the waiting room. So just going to admit a few more people. A few more I've just let in. Sorry, guys, you missed the start of the presentation. I've introduced the construction team. So if you've just come in, you have to just bear with us. We've gone through the first part of the introduction of our development team. We're now talking about HJ Collection, the developer. Get to know our numbers and who are we? What do we do? Because there's a lot of people on here that are still unsure. still might not have met us in person. We're a developer. We develop nationwide, right the way throughout the UK. And if you want to team up with us, we've done 650 plus units. We've paid back north of 31 million to investors. Our average uplift is 46%. There's no fees for investors. So when you invest, when you buy a house, you've got stamp duty, lawyers' fees, and other fees that go on that come out of your yield. With us, there's no extra fees. Okay. Our business model is very, very simple. We work in a legislation called permitted development rights, and we specialize in working in second and third tier cities. We've got a great track record in these second and third tier cities, and also converting office space to residential. Now, just like you to think quickly, you've probably been out and about today on your travels. How many of you have actually gone past, drove past, walked past, been on the bus, on a train, looked out the window and seen an unused office building in and around a local area to yourself? There's loads of them. And there is also, as we all know on this call, a big shortage of housing in the UK. We need new homes. The government needs to produce new homes. And there was a legislation passed called permitted development rights, which allows developers like ourselves to convert office space to residential. And that's what we do. Purely, we buy unloved office space in and around second and third tier cities, and we convert it to residential. If you're on the call and you want to invest, or you're curious about investing, this is a way that you can invest with HJ Collection. There's 4 things. Number 1, you need to be an accredited investor. You have to be accredited, so you have to sign a declaration to say that you're either accredited, high net worth, or a sophisticated investor. You have to have at least £10,000. You need to speak to an account manager. So however you got on this webinar, you'd have been invited by an agent of HJ Collection, who works with HJ Collection, and they would have invited you to this webinar. The person that invited you to this webinar is the person that you talk to, and you can find out how to become a client of ours. You can sit back and enjoy the returns while we do the majority of the hard work for yourself. So look, you know what we do as a developer. You know how to get involved. What's the security for investors? Okay, so the most important element of making any investment is due diligence, and what the security is, and what the rate of return is. What we do for investors is we eliminate the risk as much as possible. Every fundraise is done through a special purpose vehicle. That special purpose vehicle owns and has a charge over the asset that you've invested into. The security trustee then holds a debenture over the SPV that's in favour of all investors into that SPV. And then also you've got the market demand, which is an element of security for investors. So let me just recap on that, just in case it didn't make sense, or just in case you want me to go over it again. We set up a special purpose vehicle. That special purpose vehicle is an SPV. It's a company that fundraises and it buys the assets. You invest into that company, you lend your capital to that company. There's a security trustee in place called Blue Water Trustees that holds the security, which is a debenture over the whole company and the assets in favour of investors. Sorry, guys, when I pause, I haven't forgot where I'm at. I'm letting more people in. And I'm just letting more people in from the waiting room. So let's look at our acquisition process. How do we find new sites? What's our pipeline looking for? All of our sites that we purchase are off market. So as an entity, we don't go to Rightmove and agents and look for sites that have been on the market for some time. We've got a team that's out there actively looking for sites that are off market. We've got strong relationships with experts in the market that know that we're a cash buyer and that we can move imminently on something what we like. And that's what we build our relationships on. And our acquisitions team are out there sourcing acquisitions right across the country. And what we find is because we're a cash buyer or we can move quick, that means we can negotiate a little bit harder. We run our own internal appraisal on the sites to make sure that they meet what we're looking for and the GDVs stack up, the build costs stack up, and the purchase price stack up. So we work everything out on worst case scenario, and we have a 3-stage step internally. So we get offered the site. Our acquisitions team are out talking to people. We that's the first step. We look at the site. They look at it. The acquisitions team, front end acquisitions team, will then run a small appraisal. The second step is to take somebody from the construction team. If that appraisal, it's not a deep appraisal, but if the first appraisal looks like the site could work for us, we then take one of the construction team out to look at it. We then do a deep dive appraisal. If the people from the construction team like what they see, they come back and do a deep dive exercise on it. And that's when the third step is when me personally, I would get involved and look at the site to see if it's something that we want to move forward with. Now, when I talk about our pipeline as a company, okay, that pipeline that I reflect and talk about is a pipeline that of all of them sites that are in that pipeline have done that 3-step process. So when I'm talking about a pipeline, it's not something that we think that we like. That pipeline has been through all 3 steps. And if we want to progress, we can do straight away. And that works for us as a business. So we've spoke about what we do as a company. We've spoke about what your security is. We've spoke about how you invest if you want to invest. Let's talk about how we get you back out of the market, because it's great. You lend in capital, you're safe, you've got security there, got adequate security. You've done your research, you're happy. But how do we as a company get you your capital back? So as you can see on the screen, there's 3 options that we use, or there's 3 options that we have used. There's one option on this screen, which is the top one, rent and refinance, is what we use 95% of what we do, because our business model is to convert office space, rent office space, and retain office space. Okay. The second option is individual unit sales. So we can sell the individual units off plan. So when we're in construction, when we're converting, we can put them on the open market and we can sell them to buy-to-let investors or somebody that wants to move into them. Pretty simple. Or the third option is a whole project sale. A big company, an insurance company, any company, it doesn't have to be big, any company, SME, insurance company, pension fund, company that wants a private investor, that wants an income generating asset on their balance sheet once the development's completed. And guys, just so that you know, again, these 3 things that I'm talking about are all exit strategies that we've used. So these are not exit strategies. I've sat on webinars before where I've had people tell me things that they could do, but they physically haven't done. Okay. I'm talking about stuff here that we've physically done, and that is why we can talk about it. This is not what we would try to do. This is what's been tried and tested and used. Number 1 is what we stick with, is rent and refinance, but the other 2 options are options that are there if we need to use them, and we have used them previously. We also look at, when we're converting, the sustainability impact. We look to reduce CO2 emissions where possible. We reuse existing materials and existing structures. We use energy efficient appliances and management systems. We task our teams to reduce CO2 and always looking to bring more smart house appliances in where we can. But the main thing that we use to reduce sustainable impact is where we're not building from the ground up, we reuse as much material as humanly as possible. So moving on, Let's look at a selection of projects that we've been working on. Okay. So this is stuff that we are going to show you: a couple of sites that are completed, a couple of sites that are finished, and a couple of sites that are in construction. Stafford, few of you that are on here, I can see some names, have been to these sites. And I like to talk about the sites. I mean, if you've been to any of my presentations, this site here is my favourite site. And the reason being is in the right-hand corner, on the right-hand side of the slide, you can see the building itself. That building we bought for £480,000. Can't get many more at that value anymore. It was a couple of years ago. But look, the reason that I'm just going to skip to the next slide as well, Cobham, and I'm going to go back to Stafford after. You can see there's 3 pictures of that site. This site here is in Cobham High Road. Okay, Cobham, very affluent area in Surrey. We paid £2.2 million for that. And then in Stafford, city centre, not as affluent, but it's in the middle of the country. Just under £500,000 for that site. The reason I want to talk about the purchase price is because some of you in the room would be in construction or have had some element of construction or spoke to somebody that's in construction. We physically, anybody couldn't build these buildings of what we've purchased, okay, for what we paid for them. Now let that sink in just for a minute. These 2 sites, and there's a third site as well, Abigail Court, which is in Lowestoft. You can see the size of that site as well. That site's going to have 32 new apartments in it, all studios. But you can imagine, if you haven't been there, the size of it. Cobham's got 13 apartments and Stafford's got 12 apartments. So you're talking about small buildings. We're talking about buildings that have got some size about them, yeah? 480, 2.2 and just over 1.1 million that we've paid for them sites. Now, the land itself and the materials to build them sites. In Cobham, you wouldn't get much change out of 2.8 to 3 million. In Stafford, 1.2 to 1.4 easily. And Abigail Court, you wouldn't get much change out of 1.5 to 1.6 in Lowestoft. That's to buy the land and physically build. And we're paying what we're paying for these buildings that are structurally sound, exist, and what we do is go in, rip out and repurpose the sand buildings and produce new dwellings in them. That is where this business model works so well. And that's why I love purchasing assets and looking at these assets, and why I like working in this space, because you can't build what we're buying for what we're paying for. Just let that sink in for a minute. We run through the numbers, but you can see, and a few investors' questions are going to be, how can you make the money to be able to pay the returns that you pay? Look at the numbers, guys. 480, just 570 on development costs, all-in costs just over $1 million, GDV 1.65. Cobham, again, all-in 4.3, GDV 5.6, all-in 2.15, GDV 3 million. These are 3 of our smaller sites. When I move to the next slide, I'll show you some bigger numbers. But you can see there what the uplifts are and how it works. What I want to touch on, I'll touch on the GDV after, but if we look at an Ipswich update, this is another site that's in construction as well. Nice site. It's going to be 18 apartments, 890,000 we paid for it. All in cost just under 3 million, 4.4, 4.4 million GDV once completed. Guildford, another affluent area, 3.3 purchase price, development 1.4, all in 4.7. We've got a GD of 7.4. Now, again, we couldn't build that building for 3.2 in Guildford. We couldn't build that building in Ipswich if we bought the land, the materials, the labour, the people to build it. It'd be impossible to build it for £900,000. Let's talk about the GDVs, because a lot of people say to me, gross development value at the end, that's what you value it at. Just to reassure investors, these GDVs are not GDVs that we come up with. So they're not a GDV that we believe that these sites are going to be valued at the back end. These are the GDVs of a Royal Chartered Surveyor's RICS valuation. So when we purchase developments, we always get a RICS Chartered Surveyor to value the buildings. They value the purchase, they value the build, and they value what the end value will be. So that's why when I'm talking about GDVs, these are not numbers that me or my team have plucked out the air and we believe they're going to be valued at. These are GDVs that are the real GDV in terms of what the valuer has actually valued them at. Okay? So just let that sink in. No, what excites me and why I believe this business model is fantastic is, number one, the sites that we purchase and we buy, you physically can't build them for. And we're taking unloved office space in and around the area, in and around areas, okay, and converting them into new dwellings, what we need in the country. And also, okay, we're making investors a better rate of return than what they're seeing in other places. So you've got three big factors there of what we're doing as a company and what we're creating. Let's look at a couple of sites, or this site, Maidenhead in particular, that's not in development. It's in a design stage at the moment. If you look at the size of the site, you can see the pictures. Again, I know sometimes I sound like a broken record and I do apologise for that, but it's impossible to be able to build that building for £3.3 million. Impossible. Any part of the UK, you couldn't build that building for £3.3 million from scratch. You couldn't buy the land, you couldn't buy the materials. We paid 3.3 million for this site. Forgive me, I don't know the exact figure. And normally when I'm doing my presentation, one of the acquisitions team's normally in the room, but they're not with me at the moment. But 2 years ago, this site was bought for around I think between 5 and 6 million. Somebody paid for this actual site and we bought it off them for 3.3 million. So that was what the last person bought the site for. And they was a large organisation that had it as their head office in Maidenhead. Look at the GDV, 10.7 million. Really looking forward to bringing this one to market. There's some other options with this one as well. There's a lot of land to the right-hand side where we're looking to put a slightly smaller development on. Now, look, we always look for capital uplift and we always look to maximise our opportunity, but we don't buy on hope value. Let me explain what I mean by that. We wouldn't buy this site hoping that we get planning permission to put something on the side to make the numbers work. We purely buy this site on face value of what's there right now. Okay. We know from our planning team and from our architects and feedback that we're getting, we will get something on the side of that site. That is just a cherry on the top. We don't even put that in the numbers that we're talking about on the appraisal. The bit on the side is not even in the numbers that you can see on the screen, and we've never even looked at them to see if this site's viable. We buy sites purely on what we can see and how viable they are in what's there right now. We don't do any hope. We don't buy something and hope we can add another floor on to earn more money. If we can add another floor on in design, lovely. But the site needs to work with what's there for it to be an interest to ourselves. So look, we've got a few potential sites. Like showing this map because you can see we work right the way across the country. This arrow's up as far as Leeds because we're looking at stuff in Leeds. There is stuff a little bit further, some other stuff in Stafford. We've got some more stuff in Surrey that we're looking at. So look, we've got a busy Q3 and a busy end to the year coming up. I know we're only halfway through it, but we forecast what we're looking to purchase, and there's a lot of stuff that we're looking at. If you're new and you're not working with us, you wouldn't know that HJ Collection 6, the new fund, is live. Now, if that's an interest to yourself, feel free to speak to the person that invited you to come to this webinar. They will be able to get you the information that you need, answer any questions that you've got, take you to site. We're happy. We're an open book. We're transparent. Any questions that you've got, your agent can ask. You can book meetings. You can come and see me personally. I'd love to show you around the sites that we've got going on. We've probably got a site not close to you, but in and around your region. So if you're up north, we've got something in the middle of the country. If you're down south, we've got stuff down here. So there's stuff catered for everybody. But yeah, HJ Collection 6 is live. A little bit about us. We're coming to the end of the webinar now, guys. I really appreciate your time on a Thursday afternoon. But look, there's a little bit latest news about us. I do make a bit of a joke of it. We sponsor the London Stadium. Used that are into football would know that it used to be a Premier League environment. So my marketing team haven't updated that correctly yet because they're not in the Premier League anymore. They wish they was, but they're not. And you've got the HJ Collection magazine that goes out every 6 months. So feel free. The new one will be coming out very, very soon. Look out for that. And there's articles out there of us paying back 30 million. But just touching on the London Stadium, look, it's not about football. It's about networking. We have great events. We've been to great events that the London Stadium put on. We've found main contractors. We've found architects. We've found other fundraisers that we network with and we've done business with. So it's been great to be part of that. We will continue supporting the London Stadium. We won't continue supporting West Ham, but we will continue to support the London Stadium, and you will still see our logos around. But the reason that we do that is not just because of the eyeballs that we get on the brand, that helps, but ultimately we do have some fantastic events that take place that bring like-minded people together. Similar to this webinar, I know it's online, so it's a little bit different, and it is good to do a webinar, but I am a big believer in face-to-face, and I do like to meet people. So we do these events right the way across the country, sorry. So it'd be good to see it the next one. If I just move on to a couple of slides forward, you'll see some of the events that we've got coming up, and it would be good to see some of you at them events. Obviously, we've got the webinar today. We've got an event coming up in Leeds. We've got a landlord show in London. And then in August, we've got an event in Singapore. September, we're in Bristol. October, we're back in London and Manchester. So they're the events that we've got going on. But I just want to say a special thank you to all of our investors that have worked with us from the start, from 2019 right the way through till today. Because look, there's a selection of awards, and they're only a selection, and that's not bragging. There are a selection of awards that the marketing team have put on this slide. And without our investors and without the team that we've got, we would never be able to be nominated, me personally or the business, for any of these. So it is with a massive thank you that you've allowed us to grow and bring our vision to where it is. And we will continue to push forward. With your support, we continue to convert office space into residential right across the country, giving back to the country new homes that we need. Obviously, by building and holding our assets and making our asset pool a lot bigger, and also giving a better rate of return to investors than what they see at present. So just before I finish, I do have a podcast out, Many Talks, season 4. Few of you do listen to it. I interview high-performing people in all sectors. I like to drill down on how they got to the top of their game, what their upbringing was, how they continue to be at the top of their game. We've been very busy in the last quarter, so we haven't produced as many episodes as we would like. We've got a few new episodes and a new few guests lined up, so stay tuned. It's always good to get your feedback. And again, thank you very much for listening. It's been a pleasure to run you through the presentation. Anything that you have got question-wise, please feel free to speak to the person that invited you to the webinar. Please feel free to reach out to my team directly at HJ Collection if you've got any direct questions for myself. And I look forward to working with you guys who work with us already. Thank you for your support again. If you're looking to work with us, hopefully see you at one of our next events. Thank you for your continued support, and it's been a pleasure.